Hello and welcome everyone to another weekly market commentary from StashAway. Of course, with us, our Chief Investment Officer, Freddy Lim. Freddy, how are you?
I'm very well, Philip. It's very good to see you again.
It's good to see you as well. It's good to see you as well. Hey, we have a lot of things to discuss today. We did get quite a few questions from our listeners, and as well as a couple of topics that you wanted to speak about today. Let's get right in and started on that. And the first one is gold had its best week in 4 months, right? So, despite some robust US economic and jobs data. So, where is the buying coming from at this point, Freddie?
Well, it's a little complex because gold at the same time it is rate sensitive, so it goes with government bond use, but at the same time, it's also an inflation hedge. So it can be confusing. So on the first part is sort of like we've seen a recent return of a calm to the U.S. Treasury bond markets. In fact, yield has gone back down from 1.9 level for 10 year. And that really helped in terms of gold's exposure to interest rates, right? Lower rates, good for prices, good for gold prices. Now, on the other side, um, the how do you say there is some noticeable increase in the headline inflation in the U.S. We've gone from 1.7 percentage point in February to 2.6 in March because of the base effect. As you know, last year the bottom of the market was in March, but for economic numbers was March, April, May, June. So in coming months, we're going to just see because of the base effect, higher inflation year-on-year changes that sort of feed into Go as well. So it's really finding a bottom because of the returning of rate lower and also the base effect from inflation.
Yeah, absolutely. So thanks for that, Freddie. Next question. That's obviously we never talk too much about Europe. We talk always about what the Federal Reserve is doing at their meetings, but the European Central Bank is meeting actually this week Thursday, and me and the listeners would like to know what are they likely going to do, especially when it comes to the U.S. Right? We see a lot of rising U.S. yields. So where's the central banks in Europe? But where's their head right now?
Well, the when the U.S. Treasury bond market were going down, so yield went up. The pressure was similarly exerted on the European Central Bank. However, now that there's a reversal, as we mentioned earlier with gold, the pressure has been taken off a lot for the ECB. However, a full assessment of the pace of the asset purchase program is actually officially not starting yet. It starts in June. So there's also no pressure to sort of commit to withdrawing stimulus or increasing stimulus. So most likely Thursday's meeting is going to be trying to maintain the status quo. But some members may start to make positions. There are hawks in the ECB that would say that, wow, we are vaccinating faster, economic numbers are rebounding faster. Maybe it's time to think about it. As usual, there'll be some hawks. And as usual, I think the key governors, such as President Christine Lagarde herself, she's most likely to be the more pragmatic and more likely to voice support for maintaining quantitative easing programs for a little bit longer, just to make sure the recovery is not fragile.
Thank you, Freddie. Let's move on to the questions of our listeners. So, for anyone that's new today, if you have your own questions for Freddie or myself, feel free to put them in the show notes into the comment section below the video, or send us an email to support@stashaway.com. Freddie, let's get to the first question. Jason Lim is asking, we have heard a lot from you on China tech, but how about other China bonds, for example? Is it worth to increase exposure to Chinese bonds?
Chinese bonds are a bit of a watershed moment. As you know, there's a big blow up with Huarong. Huarong as an entity is like a bank with a bad bank, right? Who's supposed to warehouse a lot of non-performing assets in the 90s, but since it's grown into the big business with a lot of leverage. The CEO Huarong was executed for fraud and corruptions, right? So it's a big deal. it's a $246 billion potential blow up. So the Chinese bond market now, the entire world is watching the Chinese government. Are they going to bail out Huarong? It's not systemically important for them to bail out yet. So instead, are they going to restructure the bonds, or are they just going to let some people lose and some people win? What is it going to be? Is this implicit government guarantee that a state-linked enterprise would never fail in China? Is that going to be put to test? So at this moment, the uncertainty is high for China bond, and this particular asset class will be a lot more volatile in coming days, weeks, and months. So it's better not to dive it into the eye of the storm.
Yeah, absolutely. Thank you, Jason, for that question to us. Next question, Freddy, is from Chi Liang Ten. And the person saying, thanks, Philipp and Freddy, for another great weekly market commentary. Freddy highlighted before the China 5G, 6G, and semiconductor vision. He's asking now, does the StashAway portfolio have exposure to these sectors? He notices that KWEB mainly invests only in internet companies and not direct exposure to these sectors. Anything for you to clarify on that?
We're looking at the secondary effect of China building up its core technology, so like we're investing in chips and semiconductors, but doesn't mean chips making or semiconductor companies are good investment. Because in fact, you also have to look at the valuation of these companies, right? The announcements are made as usual whenever the Chinese government made such announcement. Electric vehicles, semiconductors, they have gone sky high. Buying at this time is probably not a good idea. However, we're looking at the impact, the secondary benefits of them making such investment, which powers the rest of the economy better, powers new economy stocks better, software firms benefits, internet companies benefits. The internet companies in China are not exactly just internet companies; they're also online grocery stores. They're your daily life, your payment firms, and and all. It's a big group of functionalities in one. So we are looking at the secondary benefits, and hence we've chosen China innovations through more on the software side and more on the internet and more on the consumer side than to try to speculate whether semiconductor stocks can continue to go up or not. So that's one very clear distinction I want to make.
Yeah, absolutely. Next question, Freddy. We'll take a little tour back to the Western world. KP Low is asking, hey, Freddy and Philipp, what's your view on the ongoing tensions between Russia and the Ukraine that potentially a war may break out? Will this affect the markets in any way? And I think what he's referring to, I think there's a lot, we had these tensions a few years ago when first with the Crimea annexation, and now it's starting to flare up again on that border over there. What's your theory on that, Freddy?
Well, firstly, the conflict between Russia and Ukraine started with Crimea, and Crimea actually has been a drag on the Russian economy because since the Russian occupation, there's been it's a dead town, dead city, dead state, how you call it, and it actually is costing the Russian government a lot of money to maintain infrastructure, facilities, services, and it's costing them war chest in this war with Ukraine. And the byproduct of this conflict also invited sanctions, a number of small symbolic sanctions here and there. But over the years, it's tally up to the point where it is starting to be a drag on the Russian economy. So, it does affect Russia, but not the rest of the world. The only situation where this re-escalation, if it gets out of hand in the sense of more sanctions, but Russia's already had so many sanctions, maybe it didn't matter. But maybe in the sense that it actually affects Russia's status on the OPEC plus, then maybe it has some impact globally in terms of oil prices. But that's a far-fetched scenario. It has never seen US being an interfering member on what the OPEC states would do. So very, very remote, but it's a possibility.
Yeah, absolutely. Okay, thank you, KP Low, for asking the question again. Anyone has follow-up questions or you have new questions after today, feel free to submit them to us as always. We also have a few great upcoming webinars over the next few weeks, and I'm going to go through them one country by another. So for Singapore, we actually have two webinars next week. And the first one is Bring StashAway to your workplace. So if you're interested in how StashAway can actually help your company, where you work, or if you run a business with benefits for your employees, feel free to chime in or tune in on Thursday, the 29th of April at 4 p.m. And the same day in the evening at 7 p.m., we have our Financial Planning Basics webinar. And for our Malaysian audience, we have our Financial Planning Basics webinar on Wednesday, the 28th of April at 6 p.m. local time. And now that we're launched in Hong Kong, Freddy, we also have an event there. It's actually jointly held with BlackRock. It's called The Evolution of the Wealth Management Industry. So if you're interested to hear more about that, Tuesday, 4th of May, 7 p.m. Hong Kong time. Again, all of those links to sign up are in the show notes below. You can also find them on our website or social media pages. Wherever you see StashAway, you should be able to find those sign up links. And we hope to see as many as possible of you at those events. Other than that, Freddy and myself will, of course, be back next week. Until then, see you later and have a great rest of your week. Bye-bye. Subscribe to our YouTube channel to get notified whenever we have new content out for you. Also, don't forget to download the StashAway app. It's available in the Apple App Store as well as the Google Play Store. So you can start on your financial journey right now.